Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Tech Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now it's a big week for the markets. Lots of key central banks reporting monetary policy, starting off with the Bank of Japan, going through to the Fed and the Bank of England and also the Swiss National Bank as well. But we're still seeing the markets reacting to this ECB easing measures, the bulk of the huge amount of easing measures that we saw last week, still having that element of positive risk appetite that we're seeing coming through the markets on Monday morning. Stock markets strongly higher in Europe, not necessarily so much for the Forex markets, but still we're seeing some positivity. Now, that sort of is coming ahead of this key Fed meeting. Now, the big move will be that the markets are not really factoring in any sort of type of a rate hike from the Fed. However, it would be interesting to see what happens on the statement and also in Yellen's press conference, because the statement could start to sort of reduce the emphasis on the international conditions of the financial markets, and also Yellen could be potentially fairly hawkish actually in the press conference as well. But certainly with regards to exactly what she says in that press conference, well, the market will be certainly paying attention to that, and certainly after Mario Draghi turned the markets completely flipped around on what he said on Thursday, you could see Yellen being a little bit more guarded potentially in her press conference. But throughout this week, we've still got the oil price, which I still believe is a big driver of the market sentiment. It's still got a big correlation to the positive correlation to the equity markets. And we're still seeing, I think on Monday morning, that the fact that the oil price has been dragged lower, FTSE 100 underperforming, is still an issue, I think, for the markets, this oil price, whether it continues to go higher in this nice little uptrend or starts to pull lower. So watch out for that. But certainly I think the oil price is still a player in these markets. So Forex markets, well, we're seeing the euro, which has had that huge turnaround on the back of the Draghi comments in the press conference, when he said that the fact that he didn't anticipate further easing measures to go through. Now we saw the euro hugely rallying, started to drift off back towards that big pivot band, that long-term pivot between 110.50, 111. That is the big level that we're still looking out for, and that is potentially going to come under a bit of pressure in the first few days of the week. Now, cable, big rally. We've seen it actually arguably bull flag higher as well. It sort of puts it into the realms of the sort of next band of resistance around sort of 45.75 to 46.70. So we could see that tested this week if we see the bulls really continuing to go on a run. You've got a nice band of support now, 42.50. Now, dollar yen is an interesting one because you're not really seeing the dollar yen moving a great deal, even though we've had that big ECB meeting. Maybe it's sort of waiting for both key central banks this week. We're not expecting any movement from the BOJ this week. It's not a month where we're going to get any up-to-date staff forecasts, and also there seems to be a bit more of an emphasis towards the fiscal side of easing measures in terms of where they're going to be going ahead for their stimulation of the economy. So we may not get too much out of the BOJ this week, but certainly the big Fed meeting will also be a driver on dollar yen. And also moving on to the equity markets as well, we're seeing a lot of bull upside moves. Actually, we've seen an upside break on the S&P 500 back above 2,000. Now that's sort of over 11% higher on from the bottom now, and we're seeing a nice strong run higher. Not actually any great deal of resistance until 2080 on that on the S&P 500. Now the DAX is also a market that's broken out. Big Fibonacci level broken out through as well. So it sort of now opens up the next resistance band at 10,122 to 10,165. And again, it will be interesting to see if it can this time hold this break, because it couldn't hold the break last week. Can it hold that break above the fib level this time around? 9,897 is that big fib level. 61.8% if you're looking at it. And also the FTSE, a little bit of a laggard actually, even though it had a nice rally higher. It's still a bit of a laggard in terms of a technical basis, because you're still seeing sort of the problems around the RSI failing at 60. That is something I'm definitely looking out for, and also the resistance that we've got just coming up overhead. So the gold market is also a big mover that we've seen in recent weeks, and that gold price rally just beginning to arguably run out a bit of steam. We've seen the momentum indicators lose upside impetus, few negative divergences. Could that be now the time that we start to see the profit taking coming in? And what of that oil price? Well, we've got a meeting this week apparently between Iran and Russia over the oil production freeze, and could that have an impact on oil this week? Interesting that we're seeing rumours coming out or suggestions coming out that the meeting between all the big OPEC countries and Russia over a production freeze may not happen until April now, so that could be one of the reasons why oil gets a little bit dragged in the next couple of days. But it'll be interesting to see if that big uptrend on WTI and also Brent crude continues to remain intact. So what about the rest of this week? Well, as I said, we've got all these central bank meetings. We've got a bit of US retail sales as well. We've got some UK data as well. The average weekly earnings for a start, and then the annual budget, which is where George Osborne, the Chancellor, puts forward his spending plans, and that again could have an impact on sterling. But the main focus is always going to be the Fed this week. So that is your big volatility indicator there, so watch out for that on Wednesday evening. And don't forget, we've had the US clocks go forward. They've gone to daylight savings time, so they are an hour earlier in terms of their economic releases throughout the next 2 weeks if you're in the European markets, so watch out for that. But I wish you good luck in your trading, and I'll speak to you next time. Thank you.